As of the close of regular market trading on July 22, 2026, NVIDIA stock settled at $203.28 per share, reflecting a modest intraday gain of 0.23% after bouncing between an intraday low of $202.28 and a session high of $207.74, with post-market action hovering near $203.09. If you check your individual brokerage account, whether you place trades through Robinhood, SoFi Invest, or Interactive Brokers, you might notice that the broader semiconductor sector has been moving through an intense phase of consolidation. The dominant story circulating on financial media suggests that the massive hardware expansion is losing momentum, with retail traders growing nervous over high corporate capital spending, international trade friction, and new low-cost software models emerging from foreign AI labs. Yet, when you look beneath the noise on leading investing sites, the actual market dynamics reveal a completely different reality. The widespread expectation is that customer demand for hardware accelerators is reaching a natural ceiling, but the reality is that worldwide compute capacity remains in a deep structural shortage that keeps order pipelines filled well into the coming year. While short-term market participants using Robinhood stock trading platforms look at daily price fluctuations and assume the growth engine is slowing down, institutional trading desks are closely watching the massive capital expenditure commitments made by mega-cap technology firms. Cloud providers are not scaling back their hardware plans, they are accelerating them to ensure their infrastructure can support expanding artificial intelligence models and enterprise workloads. When major tech leaders like Tesla stock and Apple stock report their financial results, their infrastructure spending budgets act as a direct leading indicator for semiconductor demand. When you examine capital flows across Fidelity Wealth Management accounts and Schwab Intelligent Portfolios, institutional capital is not pulling out of the technology sector. Instead, it is concentrating around key platform leaders that control both hardware production and software distribution. To accurately gauge where the share price is headed next, we must analyze the recent intraday swings and trading volumes that have defined recent price action. Following a sharp sector pullback that tested major support boundaries near the $200 mark, NVIDIA stock established a firm defensive baseline right around its 0.5 Fibonacci support level of $200.23. Trading volume has stayed heavy, with unusual options activity showing a substantial mix of call accumulation alongside active put selling. When institutional funds sell out-of-the-money put contracts, they are taking a strong stance on a price floor while gathering attractive option yield. This positioning demonstrates that major market players view drops toward $200 as strategic buying opportunities rather than the start of a deep breakdown. Comment below how many shares of NVIDIA stock you currently hold in your portfolio and whether you are using this recent pullback to accumulate more shares or waiting for the upcoming quarterly earnings announcement. For individual investors using self-investing methods on the Robinhood app, SoFi Active Investing, or an Interactive Brokers platform, keeping a close eye on technical resistance zones is critical. Shares are currently consolidating right beneath the 0.382 Fibonacci resistance barrier at $208.78. A clean move above this technical level on heavy volume could quickly trigger momentum buying toward $219.37. On the flip side, if macroeconomic volatility or broader market selling forces force a temporary decline below $200, key downside support rests around the $192 to $197 range, where heavy buying interest emerged during previous trading cycles. The broader discussion surrounding online investment often focuses on short-term chart patterns, but lasting stock performance depends on earnings power. Looking ahead to the upcoming earnings release scheduled for August, consensus expectations are calling for quarterly revenue of approximately $91.71 billion, which represents an incredible 96% increase compared to the same period last year, alongside projected earnings per share of $2.09. For the full fiscal year, consensus analyst estimates project total revenue reaching nearly $387.84 billion. These revenue figures show that top-line growth is expanding at an extraordinary pace alongside the rapid expansion of global data center infrastructure. When seeking investment help or reviewing core positions inside Fidelity mutual funds and SoFi ETFs, understanding the underlying company framework is essential. At its core, the company provides far more than standalone graphics processors for personal computers. It builds integrated computing architectures, linking high-performance graphics processing units with custom high-speed interconnects like NVLink, advanced network switches like Spectrum-X, and a massive software foundation powered by CUDA. This integrated architecture creates a strong competitive barrier because raw hardware alone cannot process complex multi-billion parameter models efficiently. By combining hardware, software, and networking into unified systems, the business operates as a complete hardware-software engine for enterprise data centers and research facilities around the globe. A major structural growth engine that many mainstream commentators overlook is the fast-expanding demand for sovereign AI infrastructure. National governments across Asia, Europe, and the Middle East are investing heavily in domestic supercomputing centers to safeguard their national security, scientific projects, and digital independence. Recent initiatives in Japan featuring national infrastructure installations utilizing the new Vera Rubin architecture paired with tens of thousands of Vera CPUs and Rubin GPUs illustrate how public sector commitments are building multi-year hardware backlogs. These sovereign projects are funded by long-term government budgets rather than flexible corporate budgets, creating a durable foundation against potential slowdowns in enterprise capital spending. At the same time, risk factors must be carefully weighed by anyone conducting online investing through an individual brokerage, Fidelity brokerage, SoFi trading platform, or a Fidelity trading platform. Trade policy regulations and export licensing requirements remain a source of short-term friction, especially concerning specialized chip shipments to key Asian markets. Headlines regarding licensing decisions for accelerators like the H200 can trigger sharp temporary price swings. Furthermore, competition is building from two directions: direct semiconductor rivals expanding their own accelerator products and hyperscale cloud customers developing internal custom ASICs to lower operating expenses for specific internal tasks. Furthermore, market headlines regarding foreign software efficiencies like Moonshot AI's Kimi K3 model occasionally spark brief investor concern about compute demand. However, historical trends consistently demonstrate that lower token costs drive higher total usage, which ultimately increases demand for raw processing power. When examining valuation figures on popular investing sites, NVIDIA stock trades at a forward price-to-earnings ratio of roughly 22 to 23 times current year estimates, with a PEG ratio near 0.43 to 0.56. Relative to the broader technology sector, where valuation ratios frequently outpace actual profit expansion, these valuation metrics show that share price gains are firmly supported by actual cash flows and net profit growth. For long-term investors managing wealth across Fidelity ETFs or holding assets in Robinhood Investments, Robinhood Crypto, or Robinhood Cash Management, this alignment between fundamental financial performance and valuation provides a durable margin of safety. Investors who want to invest online or explore SoFi investing and SoFi stocks often ask whether current valuation levels leave room for future upside. When evaluating an investment inside an Interactive Brokers account or checking Interactive Brokers fees for active trading, notice how net profit margins and return on equity metrics have consistently outperformed broader industry averages. Furthermore, investors managing wealth across Fidelity ETFs or holding assets in Robinhood Investments, Robinhood Crypto, or Robinhood Cash Management can benefit from tracking institutional order flow. Whether you execute trades through Interactive Brokers stock trading, monitor market updates on a Fidelity mobile app, or purchase fractional shares via Robinhood fractional shares, tracking how major institutions handle support levels near $200 gives valuable context for long-term positioning. Looking ahead at potential catalysts, immediate focus remains on upcoming quarterly earnings reports from major cloud partners. As mega-cap cloud operators outline their capital allocation plans, investors monitoring market action through Interactive Brokers trading, SoFi Robo-Advisor, or Fidelity Solutions will get clear visibility into upcoming hardware purchase commitments. If capital expenditure guidance remains strong, it will confirm that the global compute expansion remains on solid ground. Beyond near-term earnings, the expanding commercial deployment of next-generation hardware platforms like Blackwell and Vera Rubin will remain essential for preserving pricing power and market leadership. In summary, while general market sentiment frequently swings between extreme enthusiasm and sudden caution over temporary industry